You cannot invent and pioneer if you cannot accept failure.
We wanted people that were insanely great at what they did.
Nobody was making any money at all. Most people thought the internet was going to be a fad.
All right. Well, it's a big day because we're welcoming somebody to the second timer club on If I Was Starting Today. And it's Brian Lockard, who is the CEO of Bala shoes. And way back in episode 26, Brian was kind enough to come on to talk about how he kind of left Nike to go after this concept of, let's make nursing shoes actually awesome and shoes that people can wear for 12 hours so they don't have to wear Crocs anymore. In full disclosure, I invested because as I work in D2C, I see things that don't work and things that do work. So that was a fun episode where we went through the idea, how he came up with it and launched and raised that round. And what's really cool is, it's going very well. And he emailed me like, hey, I'm raising another round. Are you in? Or do you want to participate? I'm like, oh, wow. I didn't know I had to make this decision. And so we thought it'd be fun to recap, his journey from idea to raising money and like what's gone well, what's not gone well, and where he's at. But anyway, Brian, welcome back.
Thanks for having me, Jim.
Yeah. So I don't know if you want to I want to hit on the milestones that you've kind of had. It's obviously you left your job at Nike and doing some other consulting work, you had this idea, you do a small round to kind of test concept. It goes well. Time passes, you have to do another round of funding, and that round just completed. And that's where we sit today. Is that kind of the poor man's journey of Bala that I try to put together?
Yeah, that's correct. We first came to market in September of 2020 via pre-sale. We sold $1 million, worth of shoes in 12 days. We opened our Shopify page for continuous commerce in early January 2021. And, when you look back at our first full year in business, we've achieved some, pretty significant milestones in a year when we were truly testing the market. We focused really narrowly on nurses in the United States and distributed direct to consumer. In our first year, we proved the business could be high growth with, $4.5 million in revenue. We proved that, it's a high long-term value opportunity because we did 21% repeat purchase rate. And that's notable because most of our customers haven't even reached the end of the useful life of their first pair. So this is all customers buying to have a second color or to have a pair for an alternate use. And, even in a difficult environment where everyone's seeing, things about, supply chains driving up costs and driving down margins, we hit 45% gross margin. And, as we closed out the year, we wanted to, gain more traction, before going to Series A. So we raised a small seed round of financing at $1.25 million. So thank you for your participation in that. And, it gave us runway, through the end of this year where, we're diversifying our message to appeal to all healthcare professionals. We're going to diversify our product line, both by bringing more color into our core product, the Bala 12s, and we're going to have a second offering by the fourth quarter of this year. And, we're scaling acquisition to, build on the marketing channels online that that drove our strength in year one. And we're going to start adding new digital channels like TikTok and YouTube. And, now as the pandemic winds down, we'll finally be able to, connect directly with, our customers in care settings around the United States.
Okay, you just dropped a lot of knowledge there, and I'm going to take a step back because you said something that if I'm listening to this podcast, I'd be like, stop it right now and ask this question. You did 7 figures in 12 days, and that's something we got into in the first pod. But from what I recall, if I'm trying to replicate, okay, how in the world did Brian do that with Bala? How do I replicate that? The strategy that I understand is you put in the hard work. You interviewed something like 200 nurses or 50 nurses. I can't remember. You get their feedback. You get them essentially on a list. And then leading up to that launch, you're partnering with people in the nursing community and, seeding the product with them to get the word out there. And then you launch and boom, 7 figures. Is that what you did? What am I missing if I'm trying to do what you did at launch?
Yeah. So, one, you hit the nail on the head with the start is, we started before we even started, designing and developing a product, or recruiting a designer to do that. My co-founder, John, and I traveled around the country interviewing nurses everywhere. And, we talked to about 500 people before we decided to start the business. And that was a lot of legwork, but it was worthwhile because, we gained not just product insight into like what would be needed to, meet the rigors of a shift in a care setting, but also we got to understand what it's like, to work in healthcare. And then 3, we got to meet, a lot of different, healthcare professionals. And, one, we did get to meet directly with, countless people who, trialed, our products. And this was in March of 2020 during the early stage of lockdown. So we had large groups of people, here in Portland who tried our products, gave product feedback to our original designer. And then, we were able to grow really quickly through social media partnerships. I mean, there was one influencer in general who, brought a large audience, was able to, authenticate the product, with that audience and drive a lot of, our early growth through that pre-sale.
That's amazing. Did you at any point think about doing a crowdfunding platform like a Kickstarter for Bala? Was that ever a decision? And if it was, why did you decide against it?
It's in terms of like a standard like Kickstarter.
Yeah, like
model.
a Kickstarter to either like just get some money in, or even just kind of as like a PR move.
Yeah, so I explored every funding solution out there. Just getting the business off the ground, anywhere there's green money, I go to look for it. And we explored every option. And Kickstarters are really interesting. What we found the challenge to be is that, the consumer experience that we wanted to create was a consistency in showing the brand, in defining how we interact with the consumer, and then having some sense of oversight of how long it takes in between the order of the product. And so, we raised that we had to, footwear product creation, takes really long. Like if you're at Nike, it takes 18 months from initial concept to product being in market, and asking a consumer to put up, I think, any amount of money for that type of timeline is too long. So we raised like a friends and family round in April of 2020 to fund, design development, with the milestone being like proving the product is good and launching an e-commerce page. And then by having our own Shopify site for the launch, we'd be able to really quickly transition from pre-sale into continuous commerce. And it just wouldn't be messy. And so because of that, we were able to go from pre-sale in September 20 to delivery of that product in December 20, and then opening our Shopify site by mid-January of 21.
Wow, that's really impressive, that turnaround of essentially 3 months to get the product out. So if I'm listening, you talk to 500 people, and you're just probably like getting more and more excited as these conversations go along because you see the need. That is enough for you to raise the friends and family round, and that money is going to, is it essentially like majority of it going to like getting that first run of product and like being able to pay for the people that you need to pay for and to get the site live, and not so much marketing?
Correct. Yeah. First round was all design and development of the product. And, we leveraged social media to grow awareness. And our whole approach to marketing in that early stage of the business was to bring transparency into the design process so that we could show our customers the way we're involving them into the process. So we didn't put any money into media. We didn't put any money into PR. We simply worked with influencers to bring their community into the process and use social media to be transparent and show them what was coming. So by the time a pre-sale was open, they had really gotten a peek behind the scenes for 3 or 4 months. And that was like, their onboarding period.
Yeah, That's amazing. So you have this insane launch, which is like a blessing and a curse because it goes so well, but then you set the bar so high. It's like, okay, we said 1.5. How do you do in like on day 13 or 14, you know? And now you have to go from launch to growth, and you somehow pull it off. You do $4 million. But can you talk about like that, just like what you've learned over the past year of, you know, like if I take a step back, it looks easy. It looks great. Like, look at you, 1.5 and then 4, and now you're raising. But having talked to you one off, I know it's been like a crazy ride. Like, as you look back, what have been like the highs and lows of that?
Oh, I mean, can this be a 2-hour episode?
Absolutely.
I mean, the first year of running a footwear startup, particularly in a pandemic where you're not just, you know, getting a business going, but you're trying to, you know, build the right team and build culture and build structure and process at a time where, you know, people's lives are complicated because of the pandemic. I mean, you know, we had people whose children, you know, weren't in school or had sick family members or could never come to the office. And so, I mean, that underlying current just made everything harder. And so, like, candidly, like, respect to anybody. Like, a lot of new businesses started in the last couple of years, and I think there's been some really big success stories, and we haven't talked enough about just how much more challenging it is for startups in this space. So just like hats off to any listeners who started anything in the last 2 years, because I definitely empathize with you. But, you know, some of the challenges are, one, you know, Jim, we talked in the past about how one of the most difficult things in footwear is that there's a 3-month gap in between when you place a PO and when you receive products. And as an early stage company, our terms of factories aren't as good as like the net 90 you might have as Nike with a factory. So we have to outlay a lot of our scarce capital into inventory early on. And, you know, it's funny, I was just talking to another footwear brand earlier this morning that's launching later this year, and they were asking, how do you forecast sales in your first year? And, you know, based on that $1 million pre-sale, we had really high expectations for our first year. And so, you know, we ordered inventory based on high expectations from that pre-sale. And, you know, really the information you get from one pre-sale only tells you what one specific community of early adopters will do, not what the broader market will do. So we still had incredible growth. But when we started getting into some of the challenges that I'll mention in a second, you know, we ordered, you know, a lot of inventory. And then when our sales didn't meet our original projections, you know, we had way too much inventory on our balance sheet, and our working capital, you know, was getting low because we had planned for such high projections. And so what I tell, you know, early stage, like year one founders, particularly in footwear, is, you know, treat your first year like as a test where your goal is to get to the end of 12 months with a solid cushion of capital behind you and good data on what you can expect and good unit economics. And then you'll be able to more accurately project. And because we had all sorts of ups and downs because of early growth. And it's funny, like, you read anything about, like, you know, what kills early stage startups, oftentimes it's high growth. And, you know, we had a lot of challenges because of that early success. Early success. You know, number two, you know, there's all sorts of challenges that companies go through while teams are building together. And so, you know, in the middle of the year, over, you know, some disagreement over strategy, you know, we lost our co-founder and our first designer, as well as an influencer partner, and, you know, that caused you know, a 75% decline in sales over the summer. You know, we had to navigate a real cancel culture situation where, you know, our brand was really being you know, hated on by some of our early customers, you know, on Instagram. And, you know, that caused all sorts of challenges internally with our team at a time where we were trying to build trust, and there was all this negativity, you know, in social media. But, you know, getting back to some of the highs, you know, but by the fall, we were able to really ground ourselves in some of the fundamentals of marketing. We diversified our channel mix and started working with more influencers. You know, we really focused on the consumer journey and leveraging paid media, you know, to acquire leads, but having really good use of email and remarketing and leaning into word of mouth to drive growth. And, you know, by the back half of the year, you know, we're doing almost 40% of our traffic in direct and organic. You know, our sales are up 97% since early September. And, you know, now as we stabilize, we've got high single digit, you know, sales growth month over month for the last 4 months. So, you know, we went through some real challenges, and I can't state enough how difficult it is to navigate just all the, early, drama that you navigate in a startup. And it doesn't just affect you business wise, like 75%, drop in sales sounds really bad, but like, working 24/7 for 3 months straight, trying to navigate challenges takes a toll personally as well. So it's, it can be a really difficult thing, but as we get to to our second year, we've got consistent growth and a really strong team. It's almost like, I think some of those early challenges like battle test you and get you ready for like the bigger challenges that happen in the next stage of business.
It's so interesting because people don't talk about it enough. The fact that this amazing growth and success out of the gate can actually be what kills you because it goes so well. There's high expectations. You use that to project what you are going to buy. And then, people's thoughts on the business, as people on your team are exposed to different things, you can see different sides of people and whatnot. And it's just a lot to have to manage all at once. You're building this airplane as you fly, right? Is kind of the quote. But another thing that you said that I think a lot of people need to realize is the fact that you're getting your traffic where under 40% of it is from paid and new customers from paid is so important to call out because I see a lot of D2C startups that have great growth charts when you're looking from a 30,000 foot view. But when you peel back the onion, it's like, oh, wait a minute, you're using all paid ads to like inflate that growth and you're losing money because it's not, as you said, like the unit economics don't make sense. And so by you all investing in that community, you're really getting a stable base of growth. That way, as you do paid, you can be very intentional with like, hey, this needs to be ROI positive as we're putting this out there. What's like as you go from like this launch to trying to find some stability of growth and marketing channels, where is your head at how you balance that, like the short-term gains you get with paid versus investing in more long-term things or building community? Like, how do you balance that?
Yeah, I mean, obviously there's short-term needs, in a business, and we oftentimes will use paid media to drive, some short-term growth. But I think one of the errors that, companies tend to make is taking a technology approach and bringing it to consumer goods. In technology, many markets are winner takes all. And so there really is a race to, acquire customers at all costs so that you can take over an entire market. That's not the thing. That's not how it is in consumer goods. Like this is what I would characterize as a war of attrition and a focus on what is going to build a long-term competitive advantage is what really makes a difference. And so I've really shifted focus towards, our early customers, ensuring they're happy and they have ways to tell their community about the product. Investing in community building. We have a full-time community manager who has built a group of 30 healthcare professionals who we work directly with to get product feedback on, to help us define our product roadmap, to inform, our marketing and also be the voice of the brand in care settings. When I look at how I prioritize my time, as a founder, you're always thinking about, the doing the urgent things versus the important. And, I look at, in this business, I can focus on, spending time with my team and investing, in growing everyone here as leaders, because I believe that the things that we're doing now that have impact in 2 years are the most important, because we don't have to win the market this year or next year. We need to consistently grow in a way that is stable and helps us build out really solid unit economics and a solid like sales and marketing process that can grow and sustain. I mean, I think a lot of people forget that, Nike was around for almost 25 years before they even went public in 1980. It was, 35 years until, Michael Jordan came on board, and there's a lot of legwork that happens there. And so we don't have to reach $100 million in 2 years. Like, we might really first get going in like year 6 or 7, and that's okay.
Yeah, you're playing the long game on this, where I think it's some D2Cs want to get that growth right away, but that can come at a cost. One call out on the community. So you have 30 people where you're getting product feedback from. Are these people also kind of like brand ambassadors or helping push, like, spread the word? And like, how do you set that up? Because so many people talk about build a community and like, what does that mean? Because I think you all are doing it very well.
Yeah, and I feel like that's become like build community has become like a buzz phrase in the last few years, and so again, that's an area where we have to take our time to figure out what people really want. So we have a young woman named Ella who graduated Colorado College, and she started she had been an intern, and she started as a full-time employee in July when we were navigating the social media fallout from this influencer leaving. And so we really had to recreate what our approach to community was. And she took the lead on like having coffee with nurses and healthcare professionals in the Portland area, having Zoom meetings with people nationally, just understand like, what do they want out of a relationship with a brand? And from, just like John and I did 2 years ago, from, hundreds of cups of coffee and time spent building relationships, she found 30 people who really wanted to, have a relationship, with us. And that consists of, her, just checking in. Sometimes there's nothing to talk about, just to, hear how they're doing. And then so she does a summary, in our weekly leadership team meeting and our weekly marketing meeting about like what she's learning, what's the pulse, what's the heartbeat of the healthcare community right now. And, from that, we synthesize, our approach to marketing, where we're going. And then of course, we hope these people tell their friends, about the product. But I think the most important thing of this group is, they're not like a traditional influencer where there's a transactional, like, we give you X dollars, you give us Y posts. This is a group that we're trying to create a really good value exchange with. And, just like I said before, have a long-term relationship with, so that, we're an authentic part of their lives that they see value in beyond shoes. And that kind of work needs kind of, I would say, however long it takes. You can't put a date on it. It just takes the time it takes.
Wow. So you actually treat people like people and build relationships. Man, as a marketer, maybe I should do that more. That's really good advice.
Yeah. And the thing I'll add to that is that, like, it's, so much of our growth happened on social media early on. And like, social media is this like incredible drug, I think, that can drive like incredible results early on. And it can also be based on things that are misleading. And so, we've really prioritized in the back half of the year, finding ways to connect with people in a human way. And so if there's a surge in coronavirus and that means, sitting 6 feet apart outside, go do that. If it means taking the time, to connect with somebody and never talking about marketing our product, go do that. But, real human relationships, that are one-to-one, I think are getting undervalued because maybe when in a business sense, they don't have like the immediate explosive growth that, an incredible TikTok video could have. But when you look at our approach to company building, those real relationships are what are able to sustain through the inevitable ups and downs that companies go through.
That's really good advice. I was talking to someone else that invested in your round significantly more than I did, and was just really impressed with you as an operator. Like, one thing I've been impressed by is you're running this company like it's been around for 10 years, and how you do planning and how you do projections, how you're really focused on building the machine. What is your superpower? Is your superpower an operator? Is your superpower a magnet for talent? Because for me on the outside, I see the operator side being something that has been very impressive. But how much focus has been on that? And is that what you kind of pulled from the Nike days? And is that kind of your unfair advantage?
Like if you're asking about me as an individual, like I think what I do really well is learn and adapt really quickly. And, that just comes from, in the very beginning of my career, I was originally trained as a journalist where, you're essentially going out every day to try to learn something new, synthesizing it into a story that your audience can learn from. And, I did that job in like the mid 2000s. That industry was really crumbling. And so I went on this kind of 10-year journey to figure out what I wanted to do. And I was consistently adapting into, from journalism to digital marketing, from digital marketing to banking, from banking to strategic planning at Nike. And so I was kind of learning something new. So I'm really comfortable being a beginner and learning quickly and adapting to whatever's needed. And I think that's, one of the core skills to being, first an entrepreneur, and then, transitioning as a leader from, basically an individual contributor as, on a group of co-founders to, a person like running an organization and trying to like build infrastructure. And so, learning and adapting, I think, is what I do best. And, when it comes to like running a company, there's this delicate balance between like planning and, being opportunistic, that like you're always just trying to be like directionally right. And, it's hard. So you have to be ready to change. I do think that there is like, oftentimes if you look at, what we planned versus what we did, they're often very different, but the act of planning forces, enables you to see opportunities you wouldn't have seen and to be opportunistic about them. And so, I learned at Nike how to, build a 3-year plan, for, a multi-billion-dollar organization. And I think from that, I learned the core skill of planning. And in this environment, I've had to learn how to do that in a way that's, slightly more adaptable.
That's really cool just to have that experience and at that scale.
Mm-hmm.
So you and I, you came to Seattle. You and I had a lovely coffee together, talking about everything that's going on. You were pitching. You're doing your next raise, and you
Mm-hmm.
said something that really hit me. You're about to pitch to these angels, and someone came up to you. It's like, hey, when you pitch, don't just talk about why it's a good company. Talk about why it's a good investment, because people are going to give
Mm-hmm.
you money. And it's something that I think it made you really stand out among the crowd. But well, actually, so let's start with that, and then we'll get into like the economics of like the amount that you're raising. But what advice would you give to people when you have like this idea, or you have some traction, and you're about to stand up and say why it's a great company? Like, how can you also say why this is a good investment?
Yeah, and so, I'll back up for a second. One, I would offer to people, like, get out and pitch a lot and be very comfortable getting beaten up. Like, if I go back and look at like the first pitch decks I put together in like 2019, and like the ass kickings I received, from prospective investors, those were really good things to have had happen. But I would say, like, get out and pitch a lot, get very uncomfortable, and be very open about learning. Because again, going back to like, I love to learn. Like, I think I've gotten pretty good at pitching, putting rounds together, and it comes from all the advice that I've gotten, from people in the investment community. And in our first round that you participated in last year, I had the opportunity to pitch to a group in Seattle called the Alliance of Angels, and I just love that group. I mean, they're comprised of a wonderful group of people who truly love to help and support the next generation of entrepreneurs. And their process is, after an initial pitch, they connect you with a sponsor who just coaches you up for the next pitch. And I had the luck of being paired with Dan Rosen, who was one of the founders of the Alliance of Angels, now retired. And he really guided me on how to put together, a 10-minute, presentation. And, this is where, he really gave me the aha or he gave me the coaching that I shared with you. And that if you got 10 minutes, spend 3 minutes talking about why it's a good business. But what an investor really wants to hear is, why is this a good investment? And like, your plan isn't really what's important here. But, in my experience, and, take that for what it's worth, an investor wants to hear about, like, is this a growing market? Do you have, opportunity to pivot, if you run into challenges, a clear assessment of the risks and how you're planning for them. And then most importantly, how they'll get their money back. And I think this is one thing that gets missed often, is like what I found. And again, take that for what it's worth. I am by no means the gospel, but, to somebody who's putting together around a financing, our minimum was $25,000. Be able to really answer the question of like, if someone's going to give you $25,000, what are you going to do with it? What are you going to get for it in return? When are you going to raise capital again? And when and how much are they going to get back? And like, you're not going to be right about whatever the answer is, but I found you need to be able to demonstrate that you've thought it through to give people the confidence that you've done the work and that you have an understanding of your business and how you're going to get them a return.
That is such good advice when thinking about pitching, because it's so easy just to focus on your own company, but looking at it from the perspective of the investor. Okay, so that's really good advice on pitching. But one thing that you and I have talked about, it's like you see these D2C stories of like the Caspers, the Allbirds, where they go big. They raise a lot of money and they're okay with losing money, not being profitable. But that can really backfire. Even like Glossier went big. They just laid off 80 people. But then you have these other stories of companies that do it well, like the Alos, the Vioris. Talk to me about how you think about like fundraising, how much you want to raise, and any details you can get from that initial friends and family round to this round.
Yeah. And, first I want to be clear, there's a lot of, companies that have started in the last years and had different approaches to fundraising. And we've got one approach, but I'll never be critical of another founder because everyone's got different strategies. And so there have been companies who raised a ton and have, taken an approach. And then, when things don't go the way they projected, they've taken a lot of heat. And I just want to make clear, I've just got huge admiration for anybody who, has the guts to start a company and take somebody else's money and try to do something different. The way I think about it is, really long term, in the sense that, footwear's hard. We had to raise a reasonable amount of capital early on, but I want to make it last as long as I can and get the business right before we take on too much money, because how you spend your money creates culture. And right now, I just took a business trip to New York and I stayed in the Hampton Inn and I found the cheapest, flight. And, I didn't expense dinner to the business. I paid for it myself. And, my teammate who went out with me saw that. And, if you've got, millions of dollars, in capital behind you and you're staying at, fancy hotels and you're not really managing every line item, that builds culture over time. And so when I look at our fundraising strategy, a lot of it right now is about building a culture that we can scale, that's based on being frugal, that is based on a focus on driving, a business that is ready for it. And so we'll raise more when we as a business are culturally ready to take on a larger round and scale we've built in a frugal way. Because this isn't a race. This is a war of attrition.
That's really good advice. I've never thought about it from the perspective of culture. And as you do this round of, I believe it was 1.5.
1.25.
1.25. How long does that last?
A little over 12 months. I always try to raise so that we have at least 12 months of runway ahead of us.
Yeah. Well, that's exciting. So you've raised this money. What is next as you look about what to do? It's build the team, get more products, invest in marketing. Is it hey, let's go wholesale, let's sell on Amazon? What are you thinking through right now as you look to this next phase?
Yeah, so I just want to go back to year one was about testing the market. And so, we focused on the 5 million nurses in the United States who use social media and will buy direct to consumer. And, the headline for 2022 is scale what worked for 2021, that being, digital media and social, and then diversify to, reach out into the broader healthcare market. So, making our product relevant for, doctors, physicians, assistants, physical therapists, et cetera. Double down on our community approach to marketing. And, that not only helps us build trust with our consumers, but these are the people who are relevant on emerging social channels that we don't know about now. And in the not too distant future, we'll start to diversify distribution as well. I think what we've learned from some of the most successful companies, new brands out there like Fiori, is that diversifying distribution helps you reach, new customers, and is really an awareness, play. And so, we're not just focused on reaching people who buy online. We want to reach them wherever they choose to shop and create a great experience and deliver on the great products where it's most meaningful to them.
Yeah, that's so true. That's just one persona who's on Instagram to buy, but there's a lot of other people. You just got to meet them where they are. And you're so good with community. And during this pandemic, you haven't been able to have pop-ups or like any sort of offline installation close to a hospital or where nurses congregate. And I just think that that could be super exciting.
Absolutely. It's been, I get the question all the time, like, has the pandemic, helped your business? Because our customers have been most directly affected by the pandemic. And, it's created this chasm between us and our customers, candidly, where, one, we're not able to, like you said, be close to, where they are. And two, they're under immense, stress to where, when we're doing community building work, they have so many other things going on, in their life that we have to be respectful of. So it's made for a massive, challenge for us. And what I see from that is we had to be even scrappier, in our first, year or two. And there's lots of opportunity ahead for us.
That's awesome. So you and I were talking beforehand about doing this podcast. I actually had to cancel the first time because our daycare closed, so my apologies. But you're like, hey, remember the blog post you wrote? You're like, you should bring that up. So I did a blog post because you were the first angel investment that I ever did. And I did a blog post just so I could it was like my own way to decide if I was going to invest or not. And it was kind of fun to look back and be like, okay, here's why I decided to invest, and then here are my concerns. So I'm gonna list them out. We can even hit on them. So why to invest? It was a validated product, seeing the traction you had early. The second was I did this D2C checklist because we've worked with so many brands, and you literally crossed off so many of those. Like it's a painkiller, not a vitamin. You're owning a niche, good average order value, high referral potential. And I said the team is very impressive. So those were the pros. Here's the cons that I had. Product quality. It's like you're making shoes. It's like return rates on shoes are super high. You're shipping them from China. Oh no, that's a concern. And so that's an issue with the P&L, like how much money you have to balance. It's a new brand. There's a lot. It's hard to build this brand, and it's it's not a super premium product, but it's a premium product. Consumer growth, can you grow outside of just influencers? And then the team has not worked in startups before. So that can be a good thing or maybe not. And so it's kind of interesting to go back on those. So I don't know if you have any initial thoughts on that, the pros or the cons, things that stood out.
I think it's way more interesting to go through the cons, which were the risks we identified. So why don't we kick it off there? So product quality, overwhelmingly, we've gotten great feedback on the product. And so, that's a testament to the great work that our development partners did, that our factory did, and the great work that the QC partner, over in the factory did. We had some initial challenges in just the overall fit. We heard some feedback from customers that they were getting rubbing, on their heel and ankle from the inner booty. We heard that they wanted bigger loops to help pull the shoe on, and that it was a little bit difficult to get on. So we've been able to make running changes to the product. But, overall, we've gotten exceptional feedback, which again is just really a testament to the work that the team did in all of the testing before we brought the product to market. So, that was a check. It's always a running, issue that we're trying to improve on. But overall, that's been fantastic. P&L concerns. So you noted that online footwear retail, the average return rate is about 20%. We beat that. We came in at 15% in our first year. I always tell the team that when I put on my finance hat, I'm a pessimist. So I plan for that to normalize, at some point. But that was, a good thing. The thing that's been a real challenge in P&L management is one, the initial outlay of cash for ordering. And then two, everyone has been affected by, the supply chain. I mean, my wife and I moved into a new house in June, ordered a couch in July, and it showed up on January 15th. And, I've seen countless stories about that. But, the amount of capital that's tied up in inventory payments instead of working capital on the business has been a big challenge. And the increased cost of shipping. I mean, a container ship used to cost $2,500, and last I checked, it was at least $20,000. So that's put real downward pressure on margins. And,
that's insane. I saw that too. I can't believe it's gone up that much. Oh my gosh.
Yeah, it's incredible. I could do an entire hour-long show about all the other costs that have gone up related to supply chains, and we're probably going to see increased costs for materials as inflation grows as well. And so, that's been a meaningful challenge. But I talked about culture building before. If you have a culture that is built around, managing every dollar, being frugal, looking at, everyone understanding the P&L and how the business works, we can navigate that. And, we have, great financing partners who have been supportive of us in raising an additional round of capital to offset some of those impacts. So, that's kind of an always challenge, but, we were able to navigate around a number of the challenges that we discussed. Consumer growth. I mean, we touched on before, a lot of our early sales came from one influencer partnership, in particular. And then, when we had disagreements over long run strategy and that person left, it created a real challenge, for our business. And I mentioned that we had a fast start driven by the pre-sale and our brand launch in January. And then our sales declined 75%, in June, July, and August when we, managed some of the fallout from, from that departure. But we had been having challenges in diversifying our marketing because of the attraction to this one channel that had the ability to drive a lot of growth, and that forced us to execute on the fundamentals that we knew had to happen. We had to diversify our marketing mix. We had to bring an intense focus to the consumer journey, understand, how our consumers, are interacting with our website and guide them to purchase and then nurture them, post-purchase. So, that was a real pain point. And, I think that I couldn't have imagined as difficult an outcome as we navigated through over the summer, but it forced us to do the things that we know work. And, we showed that we have a team that is able to overcome challenges and do the right things. And then moving on to team, we went through a lot of the startup challenges that, a lot of teams go through. I mean, I can't sugarcoat how challenging it is to lose a co-founder who's responsible for design of the initial product. We lost an influencer partner. We lost an early executive who had hired. And, when I look at like themes is, that ability to thrive in a startup is just a really different skill set than what's needed to thrive in a large corporate environment. I mean, I'm pretty candid. Like, I don't think I ever did that well at JP Morgan or Nike when I was at either of those places. And it's a real different approach. I mean, you look at, this office, that I'm in, we were in a much smaller place before. And we got a bigger place, and I stayed after hours and spent 3 hours moving all the furniture over so that everyone would have stuff. Like, things don't just happen, and that scrappiness is something that is really hard to replicate when you've become accustomed to all of the bells and whistles that you have in a larger corporate environment. So we went through those challenges, but we've been, like I like to say, battle tested through it, and now we have a group that is truly ready to take on all of the challenges we'll see in 2022 and beyond.
Dude, that's amazing. I appreciate you being so open and honest on that. I mean, even at GrowthHit, I had someone that was essentially a partner when we started, and we actually ended on fine terms. We just had very different goals, and I really respected. He wanted, more of like the lifestyle that was very family oriented, which I really respect, where I wanted to be a little bit more aggressive in what I wanted to do. And so we parted ways. And then when I have another person that came on, and I kind of view almost as a co-founder, and but whenever he came on, we actually had a conversation like, are we aligned on the big picture here? Like, do we have the same values, and kind of doing this exercise to get it right? Because things can like really, it can be a roller coaster, right? That's what you're signing up for. So you want someone where you're on that same page. Like if you were doing it over again and like assembling a founding team, like how would you think through that?
Wow, that's a great question. I would look to find people that I either knew previously and had been through both ups and downs with, or spend a lot of time getting to know each other before you work. Because it's one thing to understand how somebody responds when times are good, but you learn about how well you'll be able to work with somebody when times are bad and in difficult situations. And like, my co-founder, John Everly, I mean, we initially met, rock climbing in the rock gym at Nike. And, we're not just business partners, we're climbing partners as well. And like, I literally trust him with my life. Like literally trust him with my life. And, in ups and downs, implicitly trust, his commitment to the business, his ability to be flexible in good times is bad. And that just took years of trust to build. And what our last year in business has shown us is that's the kind of trust that's required in a business environment. It's the kind of trust that comes from, talking about issues. I mean, I want to give credit also to, the team that we have here today. We have a really strong leadership team that's built a culture of addressing issues and talking them through, no matter how difficult or uncomfortable it's important to do, and to do it in a respectful way. And that's what I would look for is like people who can really talk through uncomfortable issues in a professional way and maintain, commitment through ups and downs.
That's really good advice. I had a former boss I worked with that was really good at interviewing. And in every interview, he would force awkwardness. He would force people to be uncomfortable and almost like create confrontation to see how the person would respond. And it would be like cringe-worthy to sit through, but it was eye-opening to see how people would respond. They'd be able to like really communicate, or they'd get really defensive or something. But that's really good advice on figuring out if you're right fit or not.
Yeah, I mean, it's even more important in a startup environment. When I was at JP Morgan, the CEO there, Jamie Dimon, used to say problems don't age well. And so I've always believed, since hearing that you have to address, issues. And in a startup, it's even more, critical. We operate not in terms of like, how many basis points increase in net income did we drive compared to last year? It's like, how many months of runway do we have? And if we don't hit our goals, we are out of business. And I'm personally very happy in that kind of environment. But, if you lose 3 months of work because you couldn't be uncomfortable for 30 minutes with a business partner over a discussion, that's a meaningful thing. Like I'm literally wasting your money if I can't have an uncomfortable conversation with a business partner. Like I take very seriously that, people like yourself have put money that you could put into like Apple stock, into us. And, it is, as a fiduciary, it's, to you, it's my responsibility to do the uncomfortable things that put our business in a position to be successful. And that can be really hard because it's really meaningful in a startup, but it's what needs to be done.
Yeah, I used to, I hate confrontation, but being a business owner makes you it's a forcing function to be good at confrontation real quick. If not, you'll be out of business. But
I'm from Philly. I got no problem with confrontation. I'm a hardened East Coaster who sometimes has to dial it down a little bit.
Yeah, you came out of the womb with confrontation. And by the way, I actually I was gonna email you. He's like, hey, I haven't gotten the notification from Carta, but I got notified like 13 days ago. So I actually still owe you money for the second wire. So I'll set that up ASAP.
Don't make me come to Seattle again.
I'm a phony angel investor this round. All talk. But well, Brian, this is awesome, man. This is super fun. I've taken up enough of your time. Anything else you want to give a plug or anything else to think through? You've dropped quite a bit of knowledge here.
No, I mean, I'm just, when you look back, so I always like to take the end of the year just to like take a few days off and just like sit and reflect. And one of those days, I poured a glass of bourbon, I sat there and I closed my eyes and I just thought about all of the things that it took to get our company from, zero, like me riding my bike around Portland, trying to figure out how to get some healthcare professionals talking about shoes, to, $4.5 million in revenue, almost 40,000 customers, and, a wonderful team. And, people are oftentimes, talking about, founders and the founders' commitment. But when I look at all the contributions that have been made to this company, it's really extraordinary. We have over 40 people on our cap table who have invested in our rounds, who have allocated money that, like I said, they could do with anything. They could go to Europe for a year. They could just put it in Apple stock, but they've chosen us. We have amazing partners in, our accountants and lawyers, our brand partners, people who took a chance on us, our employees who stuck with us through all of the challenges, over the summer, the people who, invest, gave us just amazing wisdom. I mean, as a founder of business, you're just kind of always trying to figure out something you've never done before. And the volume of people who have gone out of their way to support this business is just like truly humbling. And the sense of gratitude I have, I'm not nearly well-versed in English to be able to communicate, that how in awe I am of the people who have made this a reality. So just like big thank yous to everybody.
That's awesome, man. Well, cool. Excited for when we do round 3 after you IPO. It'll be a blast. But man, Brian, this is super fun. Thank you for your time.
Yeah, thanks so much, Jim. See you soon. Cool. Bye.